Welcome to Recalculating America, a program dedicated to small business in America. Recalculating will help you, the American small business owner, build a new business or help you to grow your existing one. Each week, experts will give you useful information about starting your new business, and you will hear from professionals selected to help you grow your business. Your hosts are Don Mazzella and Dan Perkins. Don Mazzella is the editor-in-chief of the Small Business Digest and has many years of experience helping small businesses build and grow their businesses. Now he is sharing his ideas with you over the air. Dan Perkins is a registered investment advisor with 43 years' experience in managing money. He specializes in helping small business owners make their money work as hard as they do. Now, your host, Don Mazzella and Dan Perkins.
Dan Perkins here, and I'm your co-host along with Don Mazzella of Recalculating, the radio program that has evolved out of the award-winning book dedicated to helping small business leaders increase their profits. We draw our name from the book named the best small business publication for 2017 by the Independent Press. This book features contributions of more than 100 presidents, experts, and leaders who offer you ways to grow your small business. Don?
Yeah, there are those, Dan, as you know, who say the mom and pop store is a thing of the past. Well, Dan, our next guest has some ideas about that, and I'm really looking forward to hearing about them.
Well, good morning, Lauren. How are you?
I'm doing great. Thank you so much for having me today.
Lauren is a Senior Vice President of Small Business Solutions, right up our alley at AT&T. And he's going to talk to us about 5 tips on growing a small business. So, Lauren, tell us a little bit about yourself, how you got involved with AT&T, and is there a particular website that our listeners should go to?
Certainly. Well, so a little bit about myself. I currently run our Small Business Solutions practice at AT&T, serving small businesses all over the country. I've been at AT&T for about 9 years, and prior to that, I actually ran my own small business. So I ran a startup in Dallas for a number of years. So I've lived on both sides of the equation in terms of serving small business and being a servant of AT&T and other providers when I ran my own. Prior to that, I was in the consulting business for a little while, and prior to that, I was a Marine Corps officer. So I love what I do. I have a lot of fun with it, and I'm very lucky to serve our customers every day. In terms of a website, I think I would point everybody to AT&T.com. That's the easiest place to go to get a lot more information about some of the things we're going to talk about today.
So you've got 5 tips that you want to talk about, and so why don't you give us the first one, and then we'll talk about it.
Sounds great. So one of the things, we launched these tips around National Mom and Pop Business Day, which is closely followed by Small Business Week, which we just wrapped up. And so I was excited to pull together a couple tips that I think are key for small businesses to think about. And these are in no particular order. But I think all 5 are really relevant to managing your business and growing it. And the first one that I pulled together is about data and about using data. And nowadays in the media, we hear a lot about big data. And that's, to me, it's almost an intimidating term because I think a lot of us, when we think about big data, we have this image of a data scientist and complicated algorithms and equations on a blackboard that none of us can really understand. But when you think about data is critical to a small business. And it's not about big data. It's more about thinking analytically. And what I mean by that is asking yourself just a couple of questions around data, which is what kind of information would I need in order to help me make better decisions? What information would I need to help me serve my customers better? If I knew about something about my customers, how could I serve them better? How could I reach out to them better? How could I design products that are more effective for their needs? And that's something all of us can do. It doesn't require a data scientist. It doesn't require complicated algorithms. It just requires us to think analytically, think about how we can pull data together and use it to make better decisions. That's the first piece of advice I would give to some of our small business customers out there. It's all around using data more intelligently.
So let's move on to the second point.
So the second piece of advice I would give small businesses is around digital and digital communications and digital information. A lot of our customers, a lot of entrepreneurs, a lot of times when we think of entrepreneurs or we think of startups, we think of the young kid that drops out of college. But most small businesses are actually started by people who are later in their careers. And a lot of times, if you're later in your career, you can be a little bit hesitant to think about adopting some of the new tools when it comes to communicating with your customers. So, for example, you may not feel comfortable personally being on Facebook or being on Instagram or being on LinkedIn or being on Twitter. That being said, that's where your customers are. And so although you may not want to be there personally, your business needs to be there. And so in terms of having a voice and having a presence on those digital tools, it's critical. Your customers will be looking for you. They'll be searching for you online. And increasingly, searching for you online doesn't always mean I type a search phrase into Google. It means a lot of times I may look for you on LinkedIn, or I may look for Twitter feeds that have to do with my area of interest or the product or the solution I'm interested in finding. And so it's important for you to have a voice and for you to have a presence in some of these digital platforms. The final thing I'll tell you is you have to keep in mind that a lot of customers now are going to be searching for you on their mobile devices. A lot of folks, when they're thinking about buying a product or adopting a solution, they're not always in the office or they're not always at home. In fact, increasingly, they aren't. And so increasingly, they're going to be using their mobile devices. You want to make sure that your digital presence works for mobile. One of the things that's incredibly frustrating, and I'm sure all of us have run into this before, is when we're out and about and we open up our mobile device, we do a quick search, we find a business that we're interested in, and then when we click on their website, it's not compatible for mobile and we can't search it properly on our mobile device. So you want to make sure you're staying ahead of that. You want to be on those digital platforms. You want to be in that social media, and you want to be available for folks when they're on mobile devices. Even if from a personal perspective, you may not be as comfortable, your business needs to be there.
So there seems to be a lot of discussion about whether social media in a business environment is a fad or fundamental. What do you think?
I think it's absolutely fundamental. I think there's a big difference between usage of social media while people are at work, because that can be an absolute time suck. And I think that there can be a lot of discussion about whether you do or you don't want to allow your employees or your team to be on social media platforms while they're at work. And we can talk about that separately. I think that in terms of a business presence on social media, I think it's absolutely critical. I'm not sure if it's an option anymore.
Okay. So go back to the thing that you just raised. What are your feelings about letting the employees have free reign on social media?
This is an area where I've actually changed my thinking over the last couple of years. I think if you had asked me this question 2 or 3 years ago, I'd have said I don't want my employees on social media while they're at work. They need to be working. What I found over time, though, is particularly with our millennial employees, is that they can be powerful advocates for our company, for our brand, for our solutions. And you want them evangelizing your business and evangelizing your solutions and being available to your customers. Now, there's obviously a line that you want to be careful to draw. I think it's something you may want to monitor. And there's a big difference between browsing your Facebook feed to see how many people like you versus every now and then having actually a discussion with customers or with your friends about your business and about your solutions. But over time, I've found that actually allowing your employees to spend a little bit of time on social media and asking them to be engaged with your business, engaged with the customers, and being a promoter of your business can actually be very powerful. So there's a balance you want to strike, but I think it's a powerful tool that's emerging. So the third recommendation I would give to small businesses and small business owners is around security. And I don't mean physical security, I mean digital security, cyber security. One of the things that we've seen, and we spend a lot of time at AT&T and a lot of energy at AT&T around cybersecurity. Almost every single one of the Fortune 100 is a customer of ours in this area in some form or fashion. And the overall volume and the impact of cybersecurity attacks are increasing. And what I found is that a lot of small business owners think to themselves, well, what do I have that would be of interest? And they assume that most of the cybersecurity attacks and most of the cybersecurity interest is pointed at large businesses. And that's what we hear about in the media. We hear about the Home Depot attacks and the Target breaches and the JP Morgans of the world. And a lot of what I found is a lot of small business owners just assume that these cyber thieves or identity thieves or folks that are interested in getting access to their business and their business information, that I'm just too small to matter. And it couldn't be further from the truth. 60% of cyber attacks are directed at small businesses. And the reason is because they're easy marks. Only 14% of small businesses actually have some form of cybersecurity in place. And so 60% of attacks are at small businesses, only 14% of small businesses have security, and because of that, the impact is really dire. And just to put this in stark relief, we did a big research study around this, and it's interesting because when you think about what the impact was to those large companies I mentioned, Home Depot, Target, JP Morgan, and they might have seen a stock price dip. Some customers might have decided to shop with their competitors or use their competitors instead. But in reality, it hasn't had a huge long-term impact on those businesses. You counter that with the impact to a small business of a cyber attack, and it's devastating. The average small business, 180 days after a cyber attack, is out of business. They've shut their doors. And so security and having cybersecurity in place and having proper online security in place for small businesses is absolutely critical. And if I could just lay out a couple of recommendations. The first one, and I will get into a couple AT&T offerings that we have that I think can help here, but I think the first and the most important thing is to make sure that you and your employees are aware and are taking the necessary steps to protect your information. And so it's the basic stuff around passwords, around not allowing other people access to your devices, not sharing your passwords with other people, changing them regularly. That's really the first step. The majority of cyber attacks that we see are actually done through social engineering, where it's not that somebody has weaseled their way in from a technology access perspective. It's because they've gotten the credentials and they're able just to waltz into the network because they're masquerading as an existing employee. Second step, make sure your antivirus software is up to date and make sure you have a firewall in place. The smallest of small businesses can benefit from a firewall and being able to delay that initial access into your business. And then as your business grows, you can start to think about some more advanced security mechanisms. Do you want to have a virtual private network in place that protects your information as it goes from point A to point B? There are threat management tools that you can go out there and say, hey, where are the weaknesses in my network? It's really cheap. It's really easy to do, to get a scan of your network and understand where some of the weaknesses are at. And finally, one of the things we're seeing more and more of is something called DDoS, distributed denial of service. And what does that mean? It simply means that you have someone out there that is assaulting your website or your internal systems with traffic, and they overwhelm them. And then all of a sudden, customers can't access you anymore. And so particularly for businesses where having an online presence and having your customers be able to see you online and find you online and maybe use your services and solutions online, having some protection around these distributed denial of service attacks is critical. I can't stress enough the importance of cybersecurity, because the one thing I do see every small business owner think is, well, I'm just not that important, and it couldn't be further from the truth.
You may have seen within the last few months where Yahoo had a breach, and they took them a year to report it to their customers. And I thought that was just insane that they would allow that breach to take place and then wait a year to tell the customers. Is there, in your mind, if you have a breach, is there an appropriate or reasonable period of time to notify your clients that there's been a breach, or do you not say anything until they call you?
Oh, gosh, no. I think that the Yahoo approach, it couldn't have been more poorly handled. I think that the piece that you have to do first before you contact your customers is you need to have your facts straight. And I think that's important because a lot of times the impact of these breaches and the breadth and the scale of these breaches come out over time. And so nothing is worse for a business's reputation if when you come out and you say, well, we had a breach, but it only affected a couple hundred customers. And then you come out the following week and you say, well, just kidding, it was a couple thousand. And then you come out the following week and say, well, actually, it was 50% of our customer base. And I've seen that as well. And that drives a huge amount of distrust. And then every single customer is looking around and saying, wow, I wonder if it's me. So the first step is to get your facts straight. Who has been affected? How have they been affected? And what information has been breached? As soon as you have that, you reach out at first. I would say at scale, meaning you can. I mean, it obviously depends on the scale of the attack, but you can reach out with email, you can reach out with mail, and then over time, you probably need to reach out with a phone call to make sure that customers are aware of what's occurred and feel confident that you have it under control. I think what happened with Yahoo, just as an example, since you brought it up, is almost a case study on how not to execute and how not to operate in that environment.
So, Laurent, before you reach out to your customers, do you fix the problem and do you tell them that there was a breach, but we fixed it?
A lot of times the breach problem is more about prevention, and so what we've found is what's effective for our customers and our clients is when they reach out is to say, here was the breach, here's what occurred, here's the information that was given up, and here are the steps that we're taking to ensure that doesn't happen again in the future.
Okay, good.
The other key is you need to be careful not to be shouting from the rooftops, and this will never happen again. Because the second that you say that, you have some really smart folks out there that are going to be hell-bent on proving you wrong. So let's go to number 4. The fourth piece of advice I would give folks is around speed and about speed of response. And, it used to be when you closed the doors of your business and you locked the door and you headed home, that you were done with work for the day. And you didn't have to worry about work again until you showed up and you opened the door at 8 o'clock or 9 o'clock the following morning. Those days are gone. Your customers expect that they can reach you or at least reach out to you 24/7. And particularly if they have a customer service issue, if they have a problem, they need to be able to reach you, let you know, and ideally you're responding, even if it's a response of, we've received your issue, thank you for reaching out, and we're going to get back to you as soon as we get back into the office the next morning. Most customers, that's an appropriate response. What's not an appropriate response is going 2, 8, 12, 24 hours or a weekend without hearing anything back. And so how do you address that? It's all about mobility. It's about having the tools to manage your business, for your customers to reach out, and for you to have access to those customers, that customer outreach when you're out and about on your mobile device. And so the key is ensuring that you have those customer response tools in place, and at the very least that you're able to track and monitor and manage your business even when you're not in the office, having at least a basic amount of those tools on your mobile device. Those customer expectations have changed. And the definition of good customer service is very different now than it was 15, 20 years ago.
Yeah. Let's go to the last point.
So the last piece I would encourage people around is around the personal touch. And with all the discussion we just had around data and digital and cybersecurity and mobile technology, obviously I work for AT&T, and so I'm a huge advocate of using technology to address issues and to address problems and to better serve your customers and to bring solutions to them. What I would end with, though, in terms of the last comment is around it's being personal with your customers still matters. And a lot of times being being personal is the sound of someone's voice. And so the last advice or suggestion I would give to people is pick up the phone and call. A lot of times we think that because we write an email that, okay, now I can get that off my desk. I've responded now. I'm aware of my customer because they sent me an email and I responded for an email, and I can pat myself on the back for providing quick and responsive customer service. There is no substitute for hearing someone on the phone saying, hey, did I take care of your problem? Hey, how is our service? Are you happy with what we're doing? Is there anything else you need from us? Or just a simple thank you. Picking up the phone and calling customers every week and saying, hey, I just want to say thank you for being a customer of ours. One of the pieces I would encourage all of our small business clients to do is carve out some period of time a week. It can be 30 minutes. Ideally, it's more, but it can be 30 minutes. And the purpose of that 30 minutes is to pick up the phone and call customers. And it can be either to thank them for their business. It can be to take care of any problems they're running into. But think about the last time that you received a call from someone or you were able to call a business. They picked up the phone immediately, and it was actually somebody who worked in that business and was able to take care of your problem right there. The human voice is powerful, and making sure that you do that you take care of that, you have the technologies to help you with that. Use your voice, reach out to customers, put that personal touch in.
We want to thank you for that wonderful content that you've given us. Therival, Senior Vice President, Small Business Solutions with AT&T. And you can read, if you didn't get all those tips, you can go to the website tonight and you can hear them. Lawrence, thanks again for being with us.
My pleasure. Thank you for having me.
Right. And now a word from our sponsor.
Don't let hackers get your data. Email is insecure and can't handle large files. Instead, use Biscom's Secure File Transfer product. Military-grade security that's as easy to use as email, and it can handle attachments of any size. Visit Biscom.com for your free trial and make sure your private communications stay private. That's BISCOM.com.
So welcome back. There's been a major shift in whether merchants or card issuers are responsible for bad charges. We have somebody to talk to us today about this issue and get a better understanding. It's Monica Eaton-Cardone, co-founder of and COO of Chargebacks 911. Monica, welcome to our program.
Thank you. Thank you for having me. It's great to be here.
Thank you. And would you please tell us a little bit about yourself and your background, and then a website where people can get a hold of Chargebacks 911?
Certainly. So I am the co-founder and COO of Chargebacks 911. Our website is chargebacks911.com. And basically, our company was developed out of necessity when, as online merchants, we experienced chargebacks, and we realized there was really no solution out there that was workable. So we ended up developing a solution for ourselves, and out of necessity, Chargebacks 911 was born to service other merchants as well when we discovered that there were many, many merchants that were having the same issues. So a chargeback, first of all, is effectively when a cardholder or a consumer, a customer, contacts their bank to get a refund instead of contacting the merchant. So it's when a customer actually bought a product from the retailer. It happens online in most cases. And as a result, instead of wanting to contact the retailer themselves or, personally on the phone, instead they contact their bank, or what's available now, which is creating a lot of chargebacks, they simply click the dispute button from their mobile device.
Many places where I charge something where there is no phone number for me to call the merchant to say, I want to return this, or this didn't work, or something happened. And so I'm only left with the opportunity to go to the bank and dispute the charge.
Well, that's true in some cases, but the vast majority of chargebacks are filed. Simply stated, the number one reason for filing a chargeback is because the consumer, the customer, didn't feel like they had the time to contact the merchant. So we've all been on those long calls, or we don't want to argue, or we don't want to confront something. And the most popular type of chargeback that's filed is for canceling a recurring subscription. Instead of contacting the merchant and saying, can you cancel my account going forward, it seems like an easy, painless option to just file a dispute on the last charge, and that subscription will get canceled, and you'll get a refund for that month's charge.
What does Chargeback 911 do? Please,
what we do is we help identify the true source of the chargeback. So chargebacks, in order for a chargeback to get filed, a consumer has to make a claim that they tried to resolve this with the merchant first, when over 86% of the time that is not the case. The consumer also has to make a claim, or they could choose to make a claim saying they never received the product, they didn't receive the service. There has to be a legitimate reason for a chargeback. So there's no chargeback that's filed that says, this is illegitimate and the cardholder just wanted to use us to get a refund. What we do is we take all those chargebacks, we identify the source of the chargeback, whether it was a case where the merchant really did something wrong, like if the merchant got a chargeback because, just like you, they said they were going to cancel, you called them, you did everything, but then you didn't actually cancel, we would give merchants that feedback to say, hey, look, this is something that's wrong with your process to prevent chargebacks like this from happening. But also we'd give them feedback in terms of the chargebacks that are getting filed where the merchant did nothing wrong, and for those, we dispute those cases, very much like if you got a traffic ticket and you weren't speeding, you could go to court and contest it and get it removed. This is what we do so that merchants don't have to worry about that headache. They can recover money from wrongfully filed chargebacks, help set the record straight, and then work on the ones that are correctly filed and prevent those types of situations from happening again.
So do you work with the banks, or do you work with the merchants, or do you work with the customer, or all three?
We work with all of them. When it comes to a chargeback, it involves a lot of humans. It involves technology. So we do business. A merchant can simply sign up for service. We connect with their bank, and we handle all of their chargebacks from end to end, so that they only get a report to find out how much revenue did we recover, how many errors did we detect, and what does the merchant need to do for their business to help prevent these chargebacks from happening. For banks, we do very similar things, only in a different way. So banks are more interested in finding out customers that are abusing them, that are using banks to complete refunds that are not legitimate. So we help investigate those types of customers with our technology to help banks improve and perfect their processes. Because really, when it comes to an invalid chargeback, this is a cost for everyone, ultimately increasing prices of the product that consumer is buying. So what they're doing eventually is affecting them.
Monica, I understand, and perhaps I was wrong, but just recently the law has changed so that the chargeback now goes to the retail operation rather than the bank. Is that, am I correct on that?
So first of all, the governance of chargeback is maintained by the card network. So this is Visa, MasterCard, Discover, American Express. Now, how a chargeback happens, a customer contacts their bank. This is called an issuer. The issuer then sends that chargeback request to the network to get their authorized. That would be Visa or MasterCard, for example. Then MasterCard provides that information to the acquirer, which in turn passes that information down to the merchant. So actually all of these parties end up touching chargeback because everybody participates in some share of this liability. And at the end of the day, the merchant has a choice to make when they receive the chargeback, can either accept liability and do nothing, or they can dispute it and attempt to recover the funds or debit for that.
So now you act as almost the middleman between all these factions, if I'm hearing you correctly, and then help determine that, for instance, one household does that on a routine basis, while another household, for instance, does it maybe once in a blue moon, and then you identify them and help resolve some of these issues. Is that how it works? Am I hearing you correctly?
That's exactly what we do. Yeah, so in many ways we act like the attorney. So, if you're a merchant, you have to go to court to fight your case. You're going to get better results if you hire someone to defend you that is representing you that knows the law. And they're just going to use the law and make sure that a fair verdict is obtained. So that's really what we do. We go to court, essentially. We represent the merchant or we represent the bank, whatever the case may be. We take a look at the rules. We look at the behavior from the customer and hopefully end up re-educating that customer at the end of the day. If they filed a illegitimate chargeback, hopefully they have a consequence. They didn't end up getting the refund, and they learn from that behavior and don't do it again.
How did you decide to go into to create this business? How long has it been in business? And what are the obstacles to growth and facilitate growth?
So we're a global business. We have just about 400 staff worldwide with locations in Asia, Europe, and throughout the United States. We started, like I said, out of necessity because as a merchant ourselves, we found there was really nobody that took the time to understand chargebacks, especially from a merchant's view. So issuers and acquirers and banks and the card schemes or the card networks, they all have an understanding relative to their viewpoint. But when it comes to the merchant and you're suffering all this pain and you don't know how these chargebacks happen or that you have to defend yourself, it can become a very debilitating situation, especially if you don't have high profit margins. Because imagine you think that you're doing great, you have all these sales, you processed all of your refunds, you're ready to celebrate, and then now you just see all these chargebacks, and you don't know why you're getting chargebacks because the whole process is very technical and it's cumbersome and it's 400 pages of information that you need to read with all these codes and rules. It's a totally different language, and you don't know what to do. You have all this money just debited from your account, and then on top of it, if you are a merchant and you get too many chargebacks, you run the risk of paying fines, fees, and actually having your entire ability to process credit card transactions taken away. So for an online merchant, this means you effectively risk going out of business completely if you don't know how to manage chargebacks. So in a nutshell, we ended up just developing a solution to save ourselves. It was just survival. And then we discovered through time that we weren't the only idiots that have an online business that didn't know anything about chargebacks. There was actually a lot of people out there that had the same level of frustration. And before I knew it, I started getting calls from the banks that I did business with, and it was, hey, Monica, can you help this merchant? And I thought, okay, there's one other guy out there. And then how about this one? How about this one? And I thought, okay, I'm going to set up a website just for the heck of it, and maybe I'll do a little bit of consulting on the side. And I'm going to call this Chargebacks 911. Really is a joke, because what I wanted I wanted to be able to call 911 and be rescued from the chargeback hell I was living in. I just wanted to focus on sales. That's it. And within a few weeks, we got contacted by the New York Times, Wall Street Journal, and the rest is history. So this was back in right around the end of 2011. We went public with a brand in 2012, made a decision to focus entirely on solving chargeback problems with a solution that is really designed to create sustainability and provide merchants freedom from chargebacks. So that's pretty much our story as far as barriers or challenges in the industry. I believe anytime there's a problem, problems can either become a roadblock or they can become an invitation for an opportunity. For us, chargebacks were a problem that created an opportunity. The problems in this industry and the challenges in payments is that technology is constantly evolving. Rules are changing, legislation changes, government changes. Because we're a worldwide company, we have to deal with lots of different local changes, regional changes, politics, all sorts of things. But you know what? The cool thing about this industry is that all of these changes create an opportunity for doing something even better. Sometimes you fail your way through success, and that has been the story with us. But yeah, I'd say, the climate that we have now with just a fast-paced change with the online evolution is both a challenge and a blessing.
Well, thank you for joining us. We had Monica Eaton-Cardone, who is the co-founder and COO of Chargebacks 911. Thank you for joining us.
Hate your old fax machine? You can now fax through email. Simply write an email, attach the document, and send. Works with all major email providers. Get rid of the noisy and expensive old fax machine and try Biscom's Cloud Fax. Our solutions are great for businesses of all sizes. Visit biscom.com for your free trial. That's BISCOM.com.
Good evening, and today I want to talk about the fact that Aetna has decided that they're going to pull out of all states in Obamacare health exchange by 2018. Now, they've been pulling out of states regularly, but what we're finding is that more and more insurers are leaving the exchanges and in turn leaving the people either with no choice or only one choice and wondering if the federal government is going to replace Obamacare with something else before another company comes out and decides they're out of business and places have no insurance. That's a terribly unsettling problem for the small business. In fact, Warren Buffett, who had his annual shareholder conference last weekend, speaking to his shareholders, when the question was asked, what is the greatest threat to Berkshire Hathaway? He had an incredibly surprising answer. He said, the cost of health care. Now, I felt that was an interesting viewpoint from Warren Buffett, who was probably one of the largest Obama supporters in the world and supporter of Obamacare, for him to say that health care is unpredictable and businesses can't determine what their premiums are going to be, what it's going to cost their employees, and so it's the greatest threat. So here's a man who had said that he was a big supporter, now has said it's the biggest threat to his business. And small businesses who are trying to provide health care for their children, for their employees, find themselves twixt in between. Now, the Congress has, the House has passed a repeal and replace, went to the Senate, and McConnell said this week that he believes that the vote on repeal and replacement will not be a 60 vote plurality, but a simple 51 vote majority. So unless we have some Republicans who default and join on the dark side of the Democrats, we could have health care reform Senate version, and then it goes to the conference committees. So that uncertainty of what it's going to cost for health care is hanging over a lot of small businesses because they don't know what they're going to be able to do for themselves and for their employees and what it's going to cost. That's it for now, Don.
Well, Dan, we actually have two guests sitting side by side, which I think you're going to find interesting. They're the head, the CEO and CIO of EJ Google Cards, which they're going to explain about. There's Eliot James, he's CEO, and Harry Jenkins, he's CIO of one of the more fascinating companies in this area. Welcome to the program, gentlemen.
Hello. Hi. How are you?
Good.
Okay.
Is Eliot?
Yes.
Tell us about yourselves. How did you get involved with the company, and what's the website? And what's the company do?
So our company is EJ Gift Cards, and our website is ejgiftcards.com. What we do is we are essentially a gift card liquidation company. And basically, in other words, we cash out unwanted gift cards. So we operate in the secondary market space. So, for example, you have unwanted or unused gift card that, let's say, you received for your birthday, Christmas, holiday. You no longer have a need for it or used only a partial amount for that from that gift card, and you're looking to actually get cash from that gift card. So you go on our site, you put in the information, we give you an instant offer. You can either accept or reject that offer, and then we transfer money direct to your PayPal account within 1 to 3 business days.
You have to, Eliot, does the gift card holder have to physically surrender the card to you?
Yes. So in some instances, no, and some instances, yes. If it's a physical card, we do require it to be mailed in. However, the majority of the cards are e-cards, so right. We don't require them to be physically mailed in. They just input their card number, the card number and the security the security number, and then we transfer money to their PayPal account.
So Harry, I don't know whether this is a question for you or not, but let me ask it, then you or Eliot can respond. Christmas time, the holiday season, is what I've been told is the biggest time of the year for gift cards. In fact, merchants who sell gift cards really don't know what their Christmas season is going to be like until a substantial majority of the cards have been redeemed. So help me understand the size of the market in general in a year. How many gift cards, and I didn't ask, but how long have you been in business, and then how many gift cards have you acquired?
Okay, I could go ahead and answer that question. Well, we've been in business a little bit less than a year. Actually, August will make it 1 year, complete year. From what we've noticed, based on this past Christmas, the most recent holiday season just went by, our biggest month was in January. And we've noticed we had about between 350 to 400% increase from the prior month, which was December. So that's a huge difference. And actually, the month of December we did pretty well as well.
Yeah.
It's now to answer your question to the size of the market, the gift card industry is about $130 billion industry. Yeah. So this year it's projected to grow. Now the secondary market space is projected to grow by. Last year the projection was about $10 billion. This year it's going to be about $14 billion.
So the secondary market is what you do. People have cards.
Yeah, that's correct.
And they open their sock drawer and think, oh, I forgot I had this gift card. I don't really want to go to Macy's, so I've got a $100 gift card. So I pick up the phone or I go to the internet and I get a hold of you guys. And what is your website, by the way?
It's at ejgiftcards.com.
Okay. So I go there and I've got a $100 Macy's gift card. What do you give me?
It varies from card to card. Different brands have different rates. The higher value brands, we typically give better rates. And like the restaurant typically has lower rates. So, for example, like a Macy's will probably give, let's see, 60%. So we'll give you $60 cash for that gift card.
And then you've got the gift card and you bought it at a discount. So you bought it at 40% off. What do you then do with it?
We then resell it.
Resell it back to Macy's?
No, we don't resell it back to. We actually resell it to different exchanges that actually buy it from us, and they sell it directly to their customers.
So let me see if I can follow this transaction. I got a $100 gift card. I get $60 for it. Now you got $60 in cost. You then sell it to somebody else.
Correct.
You have to sell it for something more than 60, right?
Yeah. So let's say for like 80 or 90%.
So let's say you sell.
So we'll get $80 for that same card.
So it's $80, and then what does that person? You said goes to an exchange. What does the next holder do with it?
They resell it directly to the consumers for, let's say, 5% off. So the consumers will buy it from them at a 5% discount or a 10% discount, whatever.
So they're getting a Macy's gift card at 90 to 95 cents on the dollar.
Exactly.
That's a great deal.
Yeah,
Are there a lot of people in this business?
It's new.
Well, it's a relatively actually new market. There are a handful of very, very big players right now. Interesting thing to note, though, we are completely self-funded. The other competitors, they have VC backed. I know, like,
right.
Yeah, they raised like venture capital and stuff like that. But what really drove our growth was actually through Google. That, I would say, gave us about, I would say, 80 to 85% of our revenue comes from Google. And basically, they were like, once we had partnered with them, we were able to actually sustain that growth and just reinvest profits back into the business.
So
how did Google drive your growth?
Well, so actually, there's a number of ways. We have different marketing channels with them. We have video ads. We have display ads. We have the regular PPC campaigns. Now, the thing is, it's a bit tricky at first if you don't understand how they operate. In fact, we had started with a few different companies, but the return on investment wasn't that great. So we decided to move all our marketing budget, pretty much 100% of our marketing dollars, with Google. Now,
that's a high-risk maneuver.
It is a high-risk maneuver, but it was well worth it, and this is the reason why we were able to stay in business.
We took a whole year studying.
Yeah, we actually took a year actually studying how actually Google works. They have these, educational videos. You could look them up for free on YouTube. Studying different, marketing channels, return on investment, A/B testing your ads, which is very important, because obviously some ads work better than others. Also experimenting with different landing page optimizations where we take our visitors and actually tracking that data with Google Analytics through the marketing funnel and optimizing each step along the way from the sales cycle.
Can I ask a question, gentlemen? What do you do with a card that's expired? So someone comes along and says, I have a card that said you should use by December of 2016. Do you do anything with it, or do you just...
Harry responding. We don't really take expired card. Any card that has a deadline, we don't really we don't accept those.
And Eliot speaking, I believe there was a recent law that was passed where gift card, retailers they're not allowed to expire the cards because it's like cash basically, you know.
Mm-hmm.
So the law states that.
One of the things the retail merchants, as we were talking about Christmas, when they had a card outstanding, they couldn't really book the revenue from that card until the card was redeemed. And one of the reasons why they put time deadlines on them, because they needed to know what their exposure was going to be of how much of their cash they're going to have to pay out in redeeming the cards for merchandise. But now you're seeing that laws have changed, that there's no time limit. So that means that for somebody who was a big issuer of cards, they could have exposure out there for an extended period of time with those cards sitting in the sock drawer somewhere.
Correct. So that's one of the reasons we don't accept expired card, because once we get a card, we don't really know how long before we sell it, and sometimes it might take a month, sometimes it might take a day. So if the card expired, then it just really doesn't benefit us. So,
sure. So let's take a clean card, doesn't have a date on it, and it's $100. It's a $100 card. You're going to pay $60 for it. What's your sales process? How do you get rid of it?
Okay, so we deal with a number of different exchanges. Now we have our internal process. Obviously, we don't want to disclose how we actually operate internally.
I understand.
But obviously, we make sure we validate the card to make sure, and we usually wait. Depending on the risk of the card, because in this business, some cards are riskier than others, like, a lot of the restaurant cards and stuff like that. So we usually delay actually selling it to make sure the card is valid. Some of the things that we are doing is using artificial intelligence to detect if a card is fraudulent. And it helps reduce our exposure to selling the exchange's bad cards, because this business, we usually keep a rating on all the sellers, right? So we know how quickly we should pay out, or if we should actually hold out on paying out until we actually validate that the funds are actually there on the card.
Explain to me how are the exchanges electronic exchanges?
Yes, they are.
Okay, and explain to me how that exchange works.
So we integrate through the exchanges via an API, a liquidation API. So this is kind of like an internal platform that we've integrated with their systems. Mm-hmm. And for those that are listening, an API is it's an application programming interface. So it's basically a technical term for us to hook into their systems, okay? And we pass certain information along to them, such as maybe like the purchaser, the date, the gift card number, security code if there is one, okay?
Do you have to bundle so many cards in a transaction, or can you do one card at a time?
It's usually typically one card at a time.
Wow.
Or there's different API systems that we could actually integrate where we could actually do a bulk or an aggregation. Let's say we could submit it at the end of the day, or maybe at the end of the week. It varies.
So what did you see in the marketplace that said there's an opening for us to do something? What was not happening in the marketplace that created an opportunity for you guys to come in and start making money?
Well, here's the thing. Actually, I should have actually told you how we actually got started, which was pretty interesting. We had another prior business before, and it didn't work out so well. But with every what's the saying? Every failure carries the seed of equivalent benefit. So at that time, we were experimenting with Google. We were experimenting with Facebook. It didn't really work out too well for that business. However, we try to keep ourselves abreast of what's happening, in the marketing industry and stuff like that. We read a lot of entrepreneur books and marketing books. And one of the forums I'm part of is the Millionaire Fastlane forums. And one guy had suggested that we should take a look at this market. It's pretty interesting. It's pretty new, but we should consider it. So before I brought it up to my partner, I went ahead and just put a couple ads out on Craigslist, see what the responses was like, and I got an overwhelming response. And that's basically how we started. And then we took a look at it. We did our research, and we came in strong.
Well, Eliot, what were you and Harry doing before you started this business?
We had a roommate company. So basically, we help international students, find rooms in New York City. Basically, it's a very competitive market. Airbnb. Actually, we started this a while ago when Airbnb was still new. Yeah. And they came in with a lot of money. They just kind of took over the rental space. So that was that. We tried actually for a few years, but we just couldn't really make any really headway in the market.
What's the biggest surprise that you've had in this business you didn't see coming?
Fraud. By far, fraud. That's
fraud.
The biggest. Yeah. So we had guys, there are a number of things, and we're actually talking to different companies implementing artificial intelligence, using their technology to help prevent that. Actually, so far, what we've been doing has actually drastically reduced the amount of cards that actually went bad. Also, what we plan to do in the future is actually open an online education portal for our customers, how they can actually protect themselves, from cards going bad. Because there are a number of scams out there, if you will. And you just have to be kind of wary, since especially we're operating in a secondary gift card market space.
What percentage of the stuff that you're seeing is fraudulent?
We would say about between 5 to 10%, but with this new system, it's definitely under 5%.
Wow! So you could lose your company in fraud.
Definitely.
Wow.
Yeah, if you're not careful. Yeah, if you're not careful.
What's the largest gift card you ever bought?
The largest was about $1,000.
Did you sweat that one?
Nah. Here's the thing, right? So in this business, you have to expect a certain amount of cards are going to go bad. But the margins that we're earning on these cards, it's it more than absorbs the cost of the cards that do go bad.
So what is the loss ratio generally in this business?
I would say about for every 100 cards we get, currently right now it's about 5 cards.
So 5%.
Yeah, 5%. Yeah, exactly. Yeah.
Yeah, it's probably a little higher than the typical credit card loss ratios, but
right.
So is the fraud coming from electronics or hard plastic?
Yeah, it's mostly electronic, and there's a number of reasons for that. One of the reasons being is that, one, the customer still has access to that card, so they may go buy something with it. Who knows, right? Mm-hmm. Another thing that we see, they can either go to a different company. They basically sell the card twice. It happens. And another thing too is also it may not even be the customer. It could also be there's a lot of there's these I call it these gift cards. Yes. Not the kiosks, but there's these things where it's a little bit technical. These I guess they're thieves or whatever. They have a way to because the gift card retailers, they have a predictable sequence with the numbers, like a predictable pattern. So what they will do is they use something called a brute force attack, and basically they run through all the permutation that retailer could possibly come up for a gift card, and they wait for that card to be activated, and then they extract the value out of the card. It's a little bit complicated, but yeah, so our website is ejgiftcards.com, ejgiftcards.com.
Eliot and Harry, thank you so much.
Hate your old fax machine? You can now fax through email. Simply write an email, attach the document, and send. Works with all major email providers. Get rid of the noisy and expensive old fax machine and try Biscom's Cloud Fax. Our solutions are great for businesses of all sizes. Visit biscom.com for your free trial. That's BISCOM.com.
Thank you for joining us on Recalculating. We hope the information you received on today's show was helpful to you in starting and growing your business. Please go to our website, recalculating.biz, for past shows and special offers.